Make your move, cowboy.
I got the horses in the back, horse stock is attached. Head is matted black, got the bushes black to match. Riding on a horse, ha, you can whip your Porsche. I've been in the valley, you ain't been up off that porch. Now, can't nobody tell me nothing. You can't tell me nothing. Can't nobody tell me nothing. You can't tell me nothing. Yeah, I'm gonna take my horse to the old town road. I'm gonna ride till I can't no more.
June 3rd, 2020, 13 market moves daily. Hard to believe. Another day and the market is up again? Oh no, that cannot be happening. Guys, that is exactly what should be happening when the best opportunity of a short seller knocks in the door. Friday, Thursday and Friday, guys, we're fixing to head into this June 4th and 5th that we've been talking about the last couple of videos. So big market drop is expected based on the divergences, based on the charts, based on complete absence of volume in the market. So as the futures are up again pre-market, you may be sitting there thinking, well, damn it, I'm ready to buy some calls about now. The question is, who else is buying this shit? Okay, if you look at this situation, it's actually quite simple. Okay, no volume in the market, which, by the way, just to make it 100% clear, the key stocks that have been driving this market, okay, from the bottom of the ocean at 2174 all the way to the current levels at 3100, okay, has been Amazon and Apple and so on. All of these stocks are actually trading pre-market on the lowest volume ever pre-market that we have seen in years in these key stocks. So understanding this is important because this no volume is actually representing the fact that nobody is buying. And I know what you're thinking, but Leonardo, if nobody's buying, then why is the market going higher? Well, it's because it's actually quite simple. Nobody is selling yet. So when the selling begins, the good news, it's not going to take many sellers to bring this market to its knees. But how could you possibly explain this phenomenon? Leonardo, this makes no sense. There's a civil war in the country. Hong Kong is, being kidnapped by China. You got, global depression developing. Nobody is working. There's no production. What the hell is going on? How can you possibly make sense out of this? Guys, there's a lot of headlines that are not being able to impact the market, including like the one I'm going to show you right here. Wells Fargo says U.S. consumer is dead. And the market is up pre-market again. So with situations like this, because market complacency like this does not happen frequently, with that lies a huge opportunity to those that refuse to surrender and they pay close attention to some details I'm going to show you in this video. With that said, some really crazy stuff. We're seeing divergences all over the place. There are a couple of things that you do want to play on the call side, okay, because they have been lagging this crazy market that has been rocketing higher. And there's still room for some of these things to move higher, such as Boeing. We're considering Boeing for a day trade or swing trade today. It's currently trading per market about a 156 level. The level of a ceiling would be looking for Boeing shares about 183, guys. So get in at 156, 157 area. Get out in the 180s. Can't go hurt. Can't go wrong with that deal. Now, this is a highly speculated thing right here. We're going to talk about ETHE, which is grayscale Ethereum. Okay, now some of the other stocks, however, okay, we still remain highly bearish on LRCX, Tiffany, AMBA, and Zoom after the record number that Zoom has reported. Yes, we are short Zoom on the bounce. Surprise, surprise. Let me summarize this interesting market situation for you. So, as the market was crashing back in March, that we've accurately predicted, everybody was getting out. All institutional investors were getting out, all the retail investors were getting out, and all of a sudden, okay, even Warren Buffett was getting out. And what do we have right now? Well, since the lows of March, 2174 in S&P 500, guess what? The Fed has been buying. The question is, who else besides the Fed has been buying? Well, we know Warren Buffett has not been buying. Okay, we know a lot of institutional stance on this market situation is they have not been buying. So the ultimate answer is it's the Fed plus the retail investors, okay, which explains the record low volume in the market actually proceeding high, which we've shared with you in the charts yesterday, in yesterday's video. So without any further ado, guys, here's what we've got. Let's talk about some trades here. As wild as things are, they represent a huge opportunity. So nobody saw this move coming in Tiffany yesterday. We recommended in the alert group. Guys, if you're not signed up for the damn alerts, do it now, okay? 124, we recommended the puts on Tiffany when it was right around here. Within minutes. Now, we actually predicted the first target price of 113. We didn't necessarily expect it to hit it within 10 minutes after we send out the alert, but that's exactly what happened. The stocks get holded, hits a level of 111 after the hold, so huge trade right here. Basically, huge drop within literally minutes, and that's when your options, guys, they really take a huge appreciation in value. Since then, the stock has been sort of going up, down, but the idea here is quite simple. You want to short the bounces in Tiffany. We've noticed a huge amount of puts that were purchased in certain strikes yesterday. We're noticing that based off the conditions right there, typically we would have seen this actually bounce over 120 and hold that level. It's not holding that level, which tells us there is a move lower in Tiffany. So use the bounce in Tiffany shares as they're talking about a potential for a deal, the takeover initiated months ago, that's actually going to fall apart. So, and indeed, it does make sense that this deal will fall apart. It would make sense for the takeover party to actually pay a bunch of fines associated with the contract and not do the takeover, not to finish it through, and still come out ahead in this current situation. So, with that said, pay very close attention to Tiffany shares because they could easily drop to 105.67 as pointed out in the alerts as our next target price for that. But if the entire deal is off the table, guys, Tiffany's got no reason, no rhyme to be trading anywhere near these levels. So we could easily see it in the 80s or 90s. So target 90s, like a 92, 96 area on Tiffany for a exit in the next 2 weeks. Now here's the headline that's interesting. So basically, Wells Fargo comes out yesterday. Nobody pays any attention to this. Like, hey, no big deal. Nothing's going on. Hey, we shouldn't worry about this. Wells Fargo stops lending on default concerns. And it's not like Wells Fargo is going out there and stops lending to everybody. But I think this is notable because it really tells you the precise picture of what is currently happening with the economy and, more importantly, the state of the consumer. If you rewind all the records back to about a year ago, the market was marching higher and higher on what? It was marching higher on the simple idea that the United States consumer is so strong, and as it was piling the record levels of debt, the strength of United States consumer that derives from the record level of debts. That's a reason to buy the hell out of this stock market. Hell yeah! So the divergences were pointed out to a huge drop. As you know, if you've stayed with our channel, As you know, if you've been an alert subscriber, we have pointed this out before anybody else did. And this right here cannot be ignored because Wells Fargo literally says we are no longer dealing with used car dealerships. It's in black and white. Okay, they say, okay, we'll still make loans through new car franchises, but we're not dealing with used car dealerships anymore. So typically when you have a customer coming into a dealership, they are looking at a car, you know, a typical used car dealer would be signed up with a few lenders. Wells Fargo would be a great resource for any type of dealer to provide instant financing for that potential client on the spot. So now Wells Fargo says is, holy shit, what did we get ourselves into? And they say no more. And they're cutting all the ties with all used car dealerships across the country. Now that is a lot of fucking dealerships out there that rely on Wells Fargo to make loans. So the next time they have a customer that comes in to buy that used car, they are going to have to say, damn it. We got no money here for you anymore. So go to your credit union, go somewhere else. But the bottom line is that's a huge negative, number one, for the automotive industry. Number two, okay, it tells you that if Wells Fargo is so worried about these level of defaults in auto loans, okay, there's a way bigger issue because they're not even the biggest auto lender in the United States. So this is just the surface of what's going to be unveiling over the course of the next 12 months. There's going to be record repossessions. There's going to be a record foreclosures. But so far, so good. Let's just buy some damn calls. That's what the Fed says, and that's what a typical retail trader / investor would say. But the clear signs here. So if you take a good note of this right here, it tells you where overall, not just the economy, but where overall the financial stocks are going to be going, okay? Where overall the United States consumer is going, and that defies the theory of the market moving higher, which was solely based on the strength of the United States consumer literally just months ago. Now, Zoom trade, let's talk about that real quick. Zoom is zooming after hours last night. Now, we've actually predicted this in yesterday's video. We said, hey, initially it's going to be a pop to a level of 220, 225, followed by a reversal. So that's actually exactly what we've got. Now, we were basing this on the consistency and repetition of this highly repetitive formation on the chart pattern of Zoom. Now, this wasn't a difficult one, but Zoom puts on any bounce. Guys, we're still liking this trade a lot. As you can see, the stock hits exactly our criteria right after it announces earnings right here after hours yesterday. Trades between 220 and 225, hitting a high of 223.65. Then the stock begins to sell off, sets a lower high. Now, the perfect trade today would be to target this double top. So this double top could easily coincide with a level of 220 roughly, you know, give or take $1 or $2, because this is not like a $20 stock where you got to nail it down to 20-30 cents. I mean, this is a $220 stock at this point. So within $1 or $2, you can nail this double top type situation right here around 220 and short it. Considering the huge run-up, basically analyzing the pre-existing conditions based off the chart, Zoom's got a high potential for the reversal, especially considering the history of the stock. So pretty simple trade. Now, with that said, we may not get a pop to that double top formation, so it does make sense to stair step into the position earlier. If you guys don't know what stair stepping is, you got to find that out. Click the link below, schedule a consultation session, whatever you got to do. Make sure you understand what the hell that means. So the idea is simple. You pop, you drop. If pre-existing conditions are met, we think in Zoom case they are met. We are going to find out throughout the trading session today. At this point, if we get to the 220 level, okay, it makes sense to short because we're likely to reverse back to the 190s, 199 potentially. Now, ETHE, guys, buy and hold for 2 weeks. That is an easy trade if you don't even trade options, because quite honestly, we would have loved for this thing to have options, but it doesn't. And it's the very fact that it trades on low volume that creates high potential for a short squeeze stop situation where this thing could actually end up at 300. At the moment, I took the snapshot yesterday. It was trading at 170s. We noticed the stock with our VIP members, and we were buying it at about 160. Now, this is actually not a stock. It's a grayscale Ethereum product, and they also have the Bitcoin product. But overall, this one is literally flying to the moon, and it could easily, once it's above like 240, 250 level, it could easily move to a 300, 350 level. So you can easily just stay with this trade. You don't have to day trade it. You're really targeting a longer term move over the course of the next 2 weeks. This thing is likely to keep moving higher, keep zooming higher. So instead of buying calls on zooms, you actually want to be bullish on this ETHE. And this is how the longer time frame chart looks on weekly on ETHE, and basically the setup looks really nicely for a further breakout higher on the chart. Now, as far as the levels on the S&P 500, you basically want to short the market once it hit 31.31. About 10 days ago, we posted a video explaining the potential move of the market to 31.31 area and the 1.46 bounce ratio that we invented here, 13 market moves. So review that video to bring clarity to this characteristic of this formation that we're going through right now. But bottom line is this: you want to set a tight leash on your trade. If you're getting in at 31, let's say 31.21, 31.31, 31.29, as we're getting close to this target, you want to keep a tight leash. If we bounce about 5-6 points over that level, which could be taking place, let's say tomorrow, okay, when the market pops, you want to exit that position and reposition yourself. But if we hold that level, plus minus a few points within 31.31, it makes a perfect entry for a short selling position. This is where you want to short. This is when you want to start collecting some gains, stair-stepping out of your position. So basically, all the levels we outlined for this week, June 1st, June 5th, they're still very much on point. We potentially could drop by Friday for all the way to 28.80, despite of the absolutely obnoxious complacency that the market is displaying so far pre-market. Now, the next market move for today, June the 3rd, would be a move 1, 6, or 11 type formation. We're still on track for our historic analog using a ratio of 1.46 on the bounce. Now, yesterday we've talked about this highly predictive pattern that we've noticed that just recently developed. A sequence 4-4 resulted in a move 7. Now, this is exactly what we've got yesterday. We've got 4-4 resolved in a 7. Now, at this point, it makes sense to consider the consistency of this pattern to actually go back, because there's two criteria that are met here. Number one, before the 4-4 sequence, we had a red move. Clearly, we had a red move before this 4-4 sequence. Both of these 4-4 sequences resulted in a 7, which is exactly what we got yesterday. Now, at this point, our goal is to calculate what is next. And despite of these bullishness pre-market, there is an elevated probability of a move 6 for today. So if you observe this sequence, red move, 4-4-7, red move. Red move, 4-4-7, red move. Now, in this particular case, would make sense that would also be a 6, which is a sell-off in the market going into the very last portion of the day between 3 and 4 p.m. Now, if this actually does take place, we believe there's going to be an elevated probability of a move 2 tomorrow and a 3-11 type sell-off on Friday. The complacency is just within 48 hours from potentially peaking. Yesterday's moves, guys, it's a move 7. We pretty much opened at the same level where we closed the day before, staging a bounce, drop by the dip behavior, bounce, drop by the dip behavior, and pulling with a strong action going into the last part of the session. Today's sequence 4-7, pretty much a mirror image of each other. Here we gap lower in the red and bind the dip behavior. Here we actually stay at the same level and bind the dip behavior continues. 5-day sequence 7-11, 4-4-7. Now here's an interesting thing. At first glance, okay, this sequence looks so damn bullish, it looks like it can destroy a bear unless you pay attention to the divergences and volume. Guys, this is such a rare circumstance where the market keeps moving higher and higher and higher without no rhythm, no rhyme, no reasons, okay? And it's doing so on the lowest volume you can possibly think of or witness on the charts. That condition is not going to last forever, and when it breaks, fortunes will be made. I know of guys in our trading group that will be making over $1 million, $2, $3, $4 million when this circumstance actually breaks. So with that said, pay very close attention, guys. Okay. Yesterday we covered this very interesting pattern where the blue lines resolve into these red lines, and yesterday we actually skipped this pattern. So the question is, whether it's just a one-day skip positioning us for a red line today, tomorrow, or is it a really switch in the pattern that we have been precisely observing here? We believe that the pattern will be completed and resolved in this, and we're closer to that than ever before. This is known as a move 6 type pattern, and it does increase its consistency as the market is creating its topping formation here. So despite of the VIX actually making a lower move yesterday, VIX is still within the side trend type pattern, and it could break out higher at any given moment. Here's an interesting thing, okay? When we see pre-market moves in VIX just like this, it actually signifies the bottom in the VIX, so pay very close attention. And with that said, okay, VIX, despite of this huge downtrend that has developed over the course of the last couple of months after hitting those levels in the 80s, which we predicted when VIX was in the 15s, okay? Now that nobody believes that VIX could ever go higher again, we're saying that yes, this indeed could be the bottom for the VIX, which is why it makes sense to stay alert here more than ever so before, because the opportunity is knocking in your door. It's knocking in your trading account right now, guys. I just want you to be ready. Don't jump in quite yet. But if we get a 6-2 combination, get ready to rock and profit from this insane market opportunity. I'll catch you on the next video soon. Be patient. Target the best entries and trade like a rock. Sure, I'll see you guys soon. Let's roll.